Hello, I'm Richard Bossart. I'm your friendly tax consultant for overseas residents who are U.S. citizens and must file a U.S. tax return. And I want to tell you that I have a lot of experience with this. I am a dual Swiss-American citizen and lived overseas 42 years filing my own returns and at least 50 returns for clients, of which 30 are still current, and not only in Switzerland but in other countries in Asia and Europe. So I've also run several companies as general manager, and I've been vice president marketing, and I've also been a management consultant in my own firm. So I'm quite familiar with all of the tax situations. In fact, I dealt with them in my own case for many years. So having said that, I'd like to start on a subject today which is called alien spouses. Now, alien has a connotation of somebody from outer space, but what it simply means is that a resident alien spouse is a spouse who lives with an American citizen but is not a citizen themselves, and files a joint return with that spouse. A non-resident alien would be one who does not file a joint return. And here, when you file your tax return, and I have spoken in other sessions about who is required to file a tax return, but it's on worldwide gross income. And so you have a basic choice to make whether you file jointly with your resident alien spouse or not. And if you do, you must include any income they earn in with yours. And this is particularly true of bank accounts which you might have joint signing power for. And there, if you're filing jointly, you include the entire amount in the account to determine if you have to file an FBAR report for that year, namely that the sum total of the maximum amounts in all your accounts is $10,000 or more in the equivalent currency. And but what's the consideration of including, or let's say filing jointly with your alien spouse or not? And it does make a big difference. If you include their income, both of you can file the form which allows you to exclude overseas earned income up to an amount of $101,300 in 2016, and it goes up every year. So that could wipe away both your incomes, but then you would have the advantage of having twice as large a standard deduction in addition to all else. You don't have to fill out a Schedule A and list a bunch of deductions because you're covered, plus exemptions, personal exemptions for you and your spouse. Now, it is a good thing if the spouse, who normally does not have a Social Security number, if they get or have applied for an ITIN number, that's International Tax Identification Number. That makes their personal exemption sail through much easier. Same thing is true of children, by the way. And so you have to kind of look at the balance and see which is to your advantage. It could be that the spouse is the woman and her husband, and she's the American citizen, and her husband's the resident alien, and he may be making a huge income. In that case, it might be better to file separately, because then you only include any income earned by the wife, and only take her portion of any bank accounts that you may sign for jointly. Okay, that's it for today, and let me just give you a tip. I work with you one-on-one. I don't have an office. I don't have a bunch of girls to pay, and so my fees are much lower than the CPA firms and tax lawyers. They do good work, but they that's for wealthy people and corporations, and their fees are by the hour very frequently. Mine is a fixed fee for a given tax year, depending on your circumstances, and you can ask me questions until the Swiss cows come home. So with that note, you can contact me with the website listed below or my telephone number. So I look forward to see you. Bye.